kick off the live stream to the cloud. So that will also be broadcasting on asksbdc.com. Okay, pretty much. Okay, we're going. So when you're ready, Scott.
Okay, just one second. All right, well, good morning, everyone. My name is Scott Rogowski. I'm the director of the Finance Center for the Northern California SBDC, Small Business Development Center Network. This is our CARES loans, disaster loans update, live update, Q&A for small businesses and organizations. We do this every Monday, Wednesday, Friday from 10:30 to 12, or as long as the questions keep coming in, we'll end before 12. And yeah, this is our session 34. So our 34th session. Today is June 24th. It's a Wednesday, so we're all in this together. Jump right in. So quick introduction. SBDC, we're funded by SBA, which is the federal government, as a Small Business Administration. We have Heather Lutzy on the call today. She's the district director of the Sacramento office for the northeastern counties of the state. So we'll get to Heather a little bit later on an update. And we're also funded by the state of California, the Governor's Office of Economic Development, which is called GoBiz. Northern California SBDC network covers the most 36 northern counties of the state. We go from the Oregon border down the coast to Santa Cruz. We cover all 9 counties of the Bay Area. We go southeast to Stockton, then back up through Nevada border and the Oregon border. So we offer no cost one-on-one advising. That is 100% confidential. We also offer these webinars and workshops and educational events like e-commerce and HR law, also mostly at no cost. And we offer that for small businesses and organizations. So the Finance Center, we do nothing but help business owners access loans or access capital or money, whichever you like to call it. And we do that, before COVID, we were doing that for startups and for expansion companies, people that wanted to buy buildings, et cetera, large pieces of equipment. During COVID, we have had to become experts in the PPP, Paycheck Protection Program loan, and also the EIDL, Economic Injury Disaster Loan, and then any other direct loans that are popping up in the state of California, or national, if there's a national loan. So we are here for you at no cost, and we can navigate any loan ask that you have. Again, my name is Scott Rogowski. I'm the director. Sunita Maharaj is the associate director. Unfortunately, she's on another call for Napa Sonoma this morning. So we are kind of like double dipping a little bit there. So, all right. So the agenda, I shortened it from Monday for those of you that joined us on Monday. There's a reason why I shortened it. There's a lot of verbiage on the other slides that, number one, I don't like to read to you because it's written law and it's a little hard for me to understand. So it's hard for me to explain. So there's a disclaimer. There's a Flexibility Act that came out on June 5th. There's a little bit of a Main Street launch overview. A lot of people are asking questions about it. There's these new loans in 5 counties from 1,000 to 150. The reason why I bring those up, they're the only ones I know about directly. I live and work in Sacramento, so they're offered in the 5 counties around Sacramento. And then we'll hopefully have an SBA update from Heather, and then we'll go to Q&A. So our disclaimer is that things are changing all the time. This information was correct when we put it together this morning, but things are changing all the time. So EIDL, Economic Injury Disaster Loan, is open back up for all types of businesses, including 501c3s. So all businesses can apply today and going forward until they stop it or shut it down. So it is back open. There is still money for PPP, and currently those monies, the available monies for PPP, as we know it today, expires on the 30th of this month, to where you are not able to go get more PPP money unless they extend it, which they may, but as currently today, it's June 30th. So our message to you is that we would recommend that you don't hesitate to apply for EIDL or PPP, regardless of what you think or were told about not qualifying. So nobody's really should be discouraging you from qualifying. Nobody should technically tell you that you do not qualify. The only people that know if you qualify or not is for SBA for EIDL. Those are direct monies from SBA to you as a business owner, and they don't go through a lender. Or PPP, those come from lenders. It's backed by guarantee. Sorry, it's guaranteed by SBA, but the money comes from lenders, and they're the only ones that really can tell you yay or nay per se on that. So the first PPP forgiveness paperwork, if you're wondering why there is a calculator or there is no calculator, or we haven't given you a calculator, or we don't have a CPA on here trying to figure out a calculator, is we're not going to do that because we all have time. We have from now till like March to when the first paperwork is due for PPP forgiveness, because there's not a payment that you have to make until 10 months after your covered period. And if it's 8 weeks, then that's in March of next year. If it's 24 weeks, then it's probably like in June of next year, somewhere around there. So we don't need to rush. It's going to take you as a small business owner and us as advisors to figure out how to put all this paperwork together. It may not take till March, but it's going to take a while because there's a lot of paperwork. So we don't want you to stress too much about that. We haven't put a webinar together to teach you how to put the paperwork together because that's all individual. We're going to have to meet with you individual or do it over Zoom individually. And that sounds like a lot of work, but we're up for the challenge. So we're also not privy to lenders coming forward with the Main Street programs because they haven't actually said, heck yeah, we're so excited to jump on board to do these loans. For whatever reason, we don't know. But yeah, I know there's a lot of information out there about it. We'll talk about it a little bit, but not too much. So these are the biggest changes that have come up. There's this thing is called IFRs, and it means Internal Final Rule. And again, apparently that means that's the law. There's a bunch of IFRs on the Treasury site. It's not coming from SBA per se, it's coming from the Treasury site. So if you want to, you're bored, you can go to the Treasury site and see the next IFR for PPP, and there's one that was updated this morning. We're not going to go over it because it was mostly about felonies. And if you've had one in the last year, you're probably not going to get approved. And it talked about kind of those things, but we're not going to get into it because that's all, unless you have questions about it, you can ask in the Q&A about the felony thing. So this is the most updated information, the most biggest changes. So we figured out through our, by looking at a calendar, kind of figured this out yesterday. What was the date that would have been the first 8 weeks? And we think it's June 8th. So guess what? The Treasury and the government came out with this on June 5th. They're so smart. 3 days before. So what that means is they kind of changed everything before anybody could actually finish their first 8 weeks. They should have possibly done it a lot earlier, but guess what? They did it. So this is what we have to deal with. So if you're funded after June 5th, you automatically get the 5 years at 1%. If you're funded before June 5th, you get 2 years. You may or may not be able to increase to 5 years because that's a negotiation that you have to do with your lender. And we don't have talking points on that. If you need help, we can help you. We don't have a document on it, on how to negotiate it. We don't know what it looks like if you actually agree with your lender. So don't ask those questions because we don't know. But if you want us to talk with you, with your lender, we can figure that out. So the covered period extended. So if you want to choose 8 weeks and that's all you have for your money, that's cool. If you want to choose 24 weeks because you have more money to spend past the 8 weeks, that's also cool. And we're not super clear yet if you can ask for forgivability at like after 10 weeks, or it has to be 24 and it has to be 8. We don't really know yet. So we're waiting to hear from that. So before June 5th, the split was 75-25. You had to spend 75% minimum on payroll and 25% maximum on rent, interest, debt payments, or utilities. Well, guess what? You got to throw that out the window. That doesn't exist anymore. Now it's a 60-40 split. The minimum you need to spend on payroll is 60%, and the maximum that you can spend on rent, interest, debt payments, and utilities is 40%, which is really awesome. Kind of changed. Made it a little bit more flexible. Imagine that. It's called a Flexibility Act. So the used to be that you had to get all your employees to the FTE before whatever you had before February 15th, and then say you had 10, now you have 5, but you have to get that back up to 10, or at least try by June 30th. So they extended that to December 31st, which is awesome. you don't have to say you get them all back like today. You don't have to keep them through December 31st, obviously, because you're going to run out of money potentially, especially if your business doesn't reopen to 100% capacity. So we understand that you don't have to keep them till December 31st. You just have to get them up to December 31st. Meaning, yeah, you can't do it from today. You can do it like in July or August or September. So the first payment, as I mentioned, is not due until 10 months after your chosen covered period. So there's 3 technically chosen covered periods. There's the covered period, the alternative covered period, and then the extended covered period, if you want to call it that. There's an 8-week covered period, a 24-week covered period, and then if you get paid, if you get the money today and your payroll doesn't start until Sunday, then your actually alternative covered period starts Sunday, and then your 8 or 24 weeks start that day. So there's kind of 3. It's a little confusing, but if you did the 8-week, 10 months from 8 weeks is roughly 12 months total. It's a little less. And then 24 weeks is about 6 months, a little less, a little more depending on the days of the months for the year, for those months. Plus 10 months is 16 months. So again, we're not going to go into all the other details around the easy form, the not easy form, the long form, the short form, all that great stuff. Because it's there, it exists, it'll probably change a couple more times before you actually have to turn your paperwork in, which isn't until March. The people that are on the phone today, they got funded in the first tranche of PPP, your paperwork's not really due until like March. So you're fine. We can all chill and hang out and sing Kumbaya on about how we're going to figure all this out, okay? So we're going to roll into the Main Street program because we keep getting bombarded because business owners like yourself or people in the industry and the resources are finding out information about it. And yeah, we know it exists, but guess what? Unlike the PPP, the lenders didn't really have a chance or a choice if they wanted to choose. They did, but not really. Now there's more 7A lenders in the nation than there was before COVID. So Main Street program, we don't know enough about it. And guess what? Because we don't know enough, lenders don't know enough, so they're not like super excited doing backflips, getting ready to sign up and do these loans. So this is what it is, if you're wondering. Yes, this came out June 8th. But Main Street, people are talking about Main Street in March. So there are business loans that help eligible and small, medium-sized businesses through COVID. Imagine that. Okay. What it is, it's a program designed to help credit flow to small, medium-sized businesses that were sound financially in condition. So if you were making good money before COVID, doing really well, and you had a net profit, possibly a net profit in 19, then you were doing sound, as they say, sound. But then COVID hit, and now you have super crisis, and you want to recover from that. So loans are under the program of several features. They'll help businesses, it's a 5-year loan with floating rates. Floating rates means it's not fixed. Principal and interest deferred. There's a chart, which I'm actually going to show. I didn't show this chart Monday. And the loans ranges between 250 and 300 million. So if you wanted to loan below 250 for Main Street, at this time it doesn't currently exist. I'm sure it will later. They'll refine it as they did with the PPP, but we don't know yet. So what it isn't. So Main Streets are not grants, and they're not forgivable. It means you got to pay it back. So any interested business, and we can send the link, but you can go to, I don't know. You'll later learn that this is through the Boston Federal Reserve. So across the country, the Boston Federal Reserve, they're offering this thing, this program. So you can go to their website, and you can learn about these if you want. If you click on the lender link, it doesn't really go anywhere because guess what? There's no lenders that have signed up yet. So the Fed will participate in the lending by purchasing 95% interest in the loan. The lender retains 5%. I guess it doesn't really matter to you, but that's kind of how it's going to work. And then there's this chart. So I didn't show this Monday, but this is the chart. If you look at the loan term, they're all, so you got a new loan, a priority loan, and an expanded loan. It's very exciting. They have all these different loan types. It's all 5 years, okay? The principal payments, looks like you don't have to make a payment for 2 years. And then you're going to ask me a bunch of questions on here, but I haven't looked at this yet. So looks like you got to know calculus on how to do this. So interest payments are deferred for 1 year. And the interest rate is adjustable of LIBOR. So LIBOR, for those of you who don't know, is the European index. So that's interesting that they're using the European index, if you ask me. Guess what we use in America? We use the prime rate, it's 3.25. We also use the 1, 3, 5, 7, 10-year T-bill, which is also very low right now. But LIBOR is probably 0, or really close to 0, plus 3 basis points. So it'd be similar to prime, which they could have just used prime. I don't know why they have to make it so confusing. Look at that. You can get really large loans here, 250 to 35 million, 250 to 50 million, and 10 to 300 million. So this tells me it's mostly for larger businesses. Just like when the PPP first launched, all those big businesses got it. Some gave it back, some kept it. But then the second tranche of PPP, they lowered it. So the average size of PPP went down from like 2 million to like 75,000. Hopefully Main Street lending will figure that out too, but who knows? Let's see what else they got on here. All the other stuff, it doesn't really matter. Looks like the business size is 15,000 employees. Imagine that, or fewer. And then 2019 revenues of 5 billion or less. I bet everyone on the phone is 5 billion or less. All right, so that's all I'm going to go over.
Let me check my pockets for change. I think I might just be over that.
Yeah, right? Yeah. This is amazing. I don't know what these fools think they're doing with this. Okay, here's the chart that kind of, go ahead.
Scott, do you want me to send to share those links about the overview video and the
yeah, you might as well. Yeah, just send it to them.
I'll pop those in the chat.
See how much more it can get confusing with this.
Yeah.
So, just like the PPP has never been brought up before, like never been done before, like a brand new 7A loan product, and just like the EIDL has never been necessarily a national loan all at once. It's only usually been a city, county, maybe a state loan, but. So guess what? This loan right here, this Main Street lending program has actually never been done before either, and they're still trying to figure it out. But I guess they somehow have a chart here that kind of explains it a little bit. I'm also not going to really go over this yet because I haven't fully dove into it. But it kind of just tells you how it all works, yada, yada. There's borrowers, which is you. There's lenders, which is our banks. And then there's the Federal Reserve, which we don't normally talk to or deal with. But I guess with this program, they want you to. So there you go. That was my improv, ad lib, joking session on the Main Street program. So a lot of you said, well, how come you don't know about the other counties, Scott? And I said, well, I don't live in the other counties. So a lot of you on the phone, if you know about other counties, good for you. I don't. These are the 5 counties that I know for a direct loan fund. If you want access to these, email us at loans@asksbdc.com. or call us at 833-ASK-SBDC, and we'll get you connected. These are not grants. These are loans. Not grants, loans. Not grants, loans. We keep getting calls like, this is a grant, this is a grant. Nope, it's a loan. Okay, guess what? It's a nonprofit that's lending the money, so they're going to charge you fees and stuff. The max fees is 3% of the loan. 3% of 100,000 is $3 grand. 3% of 50,000 is 1,500. You can actually incorporate it into the loan, no problem. Nothing has to come out of pocket. But as you know, the EIDL loan and the PPP, or maybe you don't know, there's no fees up front. It's just the 1% or the 3.75% if you're a for-profit for EIDL and 2.75% if you're a nonprofit. But these loans are great loans. They're from 1,000 to 150,000. If you're like a little business, micro business, you'll qualify for 1 to 50. If you're a larger business, you'll qualify for 1 to 150 or 50 to 150. It's a 7-year loan. It's a rate of 1%. Super duper low. That's lower than LIBOR, or it's like right around the same. It's lower than prime. It's lower than, actually, it's right around the 10-year T-bill. So this is it. Sacramento, Yolo, Placer, El Dorado, Nevada. If you want to ask about other counties, you should go down to your county supervisor and talk to him, knock on the door. I'm sure they're happy to see you. You can go to the city and talk to him if you want. But I don't know of any other counties. All right. So we got to SBA. Heather Lutzi's on the call. So I'll let Heather talk about this if you want. Heather, the automatic pay principal and interest, or I can talk about it.
Sure, thanks, Scott. Hi. So as part of the CARES Act, there was Section 1112, which provides for any existing SBA guaranteed loan, either 7A, 504 or a microloan, as well as any new loan that is originated prior to September 27th of 2020, that SBA will be making the payments for the principal and interest and also fees on those transactions. So that is something that will happen automatically when your lender provides us with their monthly reporting. So again, part of the CARES Act, 6 months worth of payments, both principal, interest, as well as fees. The disaster contact phone number, as you see here, as well as their email address, and then the reconsideration process. So with the economic injury disaster loans, we, as Scott kind of alluded to earlier, have just been inundated with the amount of requests received over the past, 9 weeks on that particular program. And we have fallen behind. We have implemented some mechanisms to assist us with processing those loans. We've incorporated some public-private partnerships. We have repurposed some of our federal agencies. For example, FEMA. We have over 500 FEMA employees currently deployed to SBA to assist us in processing these transactions. So what I would tell you on the economic injury disaster loans is to please be patient with us while we work our way through the unprecedented volume that we've received. With respect to the Paycheck Protection Program, because those loans are administered through our lending partners, those transactions, you can go directly to a lender and obtain those. And I know that Scott talked about this at the beginning as well. Time is really of the essence on those programs because, or that program, pardon me, because it actually expires or sunsets on June 30th. So just next week. Very, very limited time frame on these, keeping in mind that even if you went to a lender today, the lender still has to, review that transaction and then submit electronically to SBA for the loan number. So again, time is really of the essence. If you're on the fence, please, please, please move forward and talk to your lender. Get your applications in. Of course, over the last several weeks, there have been a lot of modifications and updates to that program. Again, the interim final rules that Scott spoke about, there have been many. And it does get a little bit confusing. We here at the district offices are happy to assist in kind of navigating through that if you have questions, as well as the SBDC folks. They are happy to assist as well. What else? I think the most recent interim final rule on the PPP program was with respect to felony, criminal record. So if the applicant business principal has a criminal history, as long as it is not a financial crime within the last 12 months, they could still be deemed eligible for this product. So that was reduced from a 5-year term to a 1-year term on the rules for that. What else is relevant? Scott kind of went through the 75% down to 60% for the payroll expenses. The 8 weeks expanded out to 24 weeks. And then just for a clarifying point on that, if you have received Paycheck Protection Program and you used those funds within the first 8 weeks, you can now apply for the forgiveness through your financial institution. The agency is still providing guidance to our lending partners with respect to how they calculate the forgiveness, and we are developing the training for our lending partners on that aspect of the program. Once you have advocated to your lender for that forgiveness, the lender then has 60 days to determine whether the entire loan amount would be forgiven or whether a portion of it would be. prior to submitting to SBA for review. So just keep that in mind. The interest will continue to accrue on those loans at an interest rate of 1%. However, if it is deemed as a forgivable transaction based on the allocation of the use of proceeds, then all of that interest will go away as well, because that will then be forgiven in its entirety, provided that, again, those use of proceeds were used appropriately. I think that's probably it for now as far as an update, and happy to take questions with you, Scott.
All right, cool. Thank you very much, Heather. I was able to quickly just go through and answer 19 of them really quick. So we have 18 left. But let me go to the other slide real quick before I go there. So if you want to call us, you can call us. We've been getting ever since like June 5th, since everything changed. Actually, since probably June 15th, we've been getting about 100 calls a day. So we, our goal, actually our commitment to you is that we get to them, we get to everybody same day. So you can call us at 833-ASK-SBDC. You can go to asksbdc.com. You can see this YouTube, whatever we're doing here, this webinar thing being streamed. If you want to email us because you don't have a phone or whatever, you can email us at loans@asksbdc.com. The calls is the best. We have about 10 to 15 people on our call log, in our call team. So that's the best. They're eager, they're hungry, they're ready to talk to you, help you, get you signed up as a client. If you're not a client, again, at no cost. We can do all this for you at no cost. Or you can go to your local center if you know who they are. There's about 20 of them in Northern California. Out of 36 counties, we have about 20 centers. And we have a lot of outreach hubs and stuff like that at minority chambers and all that great stuff. Economic development corporations, cities, counties, chambers, all that. So if you want to speak Spanish or you want to know about all this in Spanish, we have a webinar in Spanish that does this every Thursday. Alan can put it in the queue or the chat. You can also email Oscar Garcia at the California Hispanic Chambers of Commerce office and his team at espanol@asksbdc.com. They do amazing work, but they do it all in Spanish and obviously English as well. But if you prefer that language, they can help you. So we'll go into the Q&A, see how good Heather and I could do in answering some of these questions, or all of them. All right. So somebody would love to review S corporation compensation with the PPP loan forgiveness. My wife and I are owners, employees of our S corporation with the new updated rules. Curious what limitations are now permitted. Are we now only restricted to our W-2 income, no health insurance premiums, and no employer sponsored retirement contributions, except IRA? I don't think there's specific S corp compensation like requirements or per se, like I mean, if you're an owner employee or employee owner, you now, if you choose the 24 weeks, you can increase your maximum forgivability per owner from $15,385 to $20,833. So that's the only thing I really know that's really changed, regardless of your entity, unless Heather has something else to say about that.
Honestly, I was unaware of that, Scott.
Okay, no worries. All right, cool. So I reopened my business, but revenue is far less than rent payment. So can I get PUA? Of course you can get PUA. Anybody can get PUA. When I get PPP in June, still can I receive PUA and spend PPP after 2 months? So what we're being told is, yeah, you can do that. Just have to be very, very cautious and very organized with your paperwork and the monies you have in the bank. You can't use PPP and PUA for payroll in the same time period. I'm a 50% owner in a business. We applied for and received an offer for the PPP. I'm currently receiving unemployment because we're not working. If I accept the PPP, will that affect my employment? It won't affect your employment only if you use the PPP money to pay yourself as well as PUA, or as well as unemployment. Based off our payroll, it is a small offer of $700. Wow. Can we use a loan to pay office rent? Of course you can. You can use the PPP to pay rent and use unemployment to pay you to work. What happens to your EIDL loan if you decide ultimately to close your business? Can you keep paying it off even after your business closes, or do they demand immediate repayment? So from what I know, they don't demand immediate repayment. They allow you to put it on a payment plan, right?
Exactly. Yeah, the same terms would still be true. So it's a 30-year term on the EIDL loan at 3.75% for profits and 2.75 for nonprofit entities. You could still be paying on that even if you close your transaction. Keep in mind that this is a federal loan and you will not be able to absolve this during a bankruptcy. The loan will never go away until it's repaid. So just want to put that out there as well.
All right. Thanks, Heather. Somebody's asking, do the direct county loans have restrictions on how the money can be spent? The answer technically would be yes, but it's different per county, so you need to call them, Dana. My EIDL loan is approved, but I need to add some info to my application. Can you please direct me to the EIDL login portal? I don't know the login EIDL portal, but here,
the best thing to do is to contact the disaster customer service number, and that was on the previous slide, I believe.
Yeah.
You can also email and let the customer service center know what you need to update. Put the application number in the subject line of your email, and you can get that taken care of through those channels. And again, Scott just put the disaster customer service number up on the screen, as well as the email address.
Okay, thank you. Thanks, Heather. It's weird. Under what conditions do PPP loan proceeds have to be used to refinance an EIDL? Well, that only really happened, Lori, like before April 3rd. I don't think they're doing that anymore, really. I don't think the PPP can.
Yeah, that's correct. Exactly.
Yeah, okay. We were funded for PPP really early. We are an S Corp, and my wife and I take monthly withdrawals. The bank said we do not qualify for a PPP, only our employees. What is? Hey, Sonny, you wrote PPPL, unless, I don't know what that is. I don't know what the L means. Now we find out that Schedule K can qualify. We have a Schedule K line 16. What is our recourse? All right, cool. Sonny, it's a very, very, very specific question. Please call our number. I'll put it in the chat to you, or I'll put it in the thing. Because I don't know how to answer that, because I would have to see your taxes to actually answer that. When and how do we start the process for asking for forgiveness for PPP? And is this through our lender or the SBDC? Well, we can help you, Jenna. We're not the ones that's going to give you forgiveness, but so the way you can start the process, I mean, Heather agreed. The lenders aren't ready for you to go and talk to them, right? They're trying to process the paperwork and understand how these loans even work. Because guess what? They didn't create the loans. The Treasury and SBA did. So they don't know how it's working. So if you want to start the process, Jenna, just reach out to us. You can call us at asksbdc.com. We'll help you, or go to your local center. They'll help you. We are dissecting it right now. We're not going to go over the full form because it doesn't make sense to go right now. It's way too early. Sunita and I are trying to dissect it and print it and read it and understand it very, very thoroughly, but it's extensive. So we're not going to do a webinar. We're not going to create any content on how to get your paperwork together unless we can somehow condense it so it makes sense to everyone and not just individuals. So it's best if you reach out to your SBDC individual, call us, email us, we'll help you. We are figuring it out as much as you are at the same time. We may know a little bit more, or may be able to understand a little bit more because we deal with it daily, and we don't just deal with one person. We deal with it like, I don't know, there's a million businesses I think in our region, so we deal with a lot of it. So we can help you. We work together. Hold your hand. We're all in this together. So how long does it take to get funded after signing DocuSign, Heather? So if they sign the DocuSign.
So for the EIDL transactions, once you have signed your documents, it's typically just a couple of days before the funding actually occurs. Typically what will happen is that the loan specialist will contact you to confirm your bank account information, and once that has been confirmed, they submit, and then it goes through a batching protocol. So, pardon me, so just a couple of days.
Okay. Thanks. After idle advance is deducted from PPP forgivable amount, does that 60-40 split then apply to the new? No. Take out this. Oh, sorry, it does. Sorry, I apologize. It does. Sorry, just went a little crazy there. My bad. So yeah, the 60-40 split then applies to the new forgivable amount. So in your example, the original amount, since that other amount is now already a loan. So PPP is 29.5. If you take 10 away, 19.5, then it does. So the 60-40 actually goes towards the 19.5, not the 29.5. And you have to do it off of that. Before there was clarity on employee accounts to qualify for forgiveness, I hired other workers than were originally let go because of the shutdown. Do these new employees count towards forgiveness? Clarity and qualify. I hired other workers. I don't know. They should.
Yeah, it doesn't have to be the same worker. If you have expanded your workforce, then that's terrific. That's actually really what the program was, would like to see done. So it doesn't have to be the same employee. We've had a lot of situations to where we've had businesses reach out to us and say, oh my goodness, our employee doesn't want to come back because they're making more money on unemployment with the addition of the PUA. And we completely understand that. So if you're able to hire additional employees, then by all means, please do.
So if you received EIDL loan, can you request additional funds for the EIDL? If yes, how do you do that? Can't request.
I'm sorry,
right?
If they received an EIDL loan and they want to increase that?
Yes.
After they've already signed docs and got the
yeah, probably.
Yeah, I mean, you could definitely send an email to the PDC Recons email that was listed previously, but really, there's no guarantee that they're going to consider that at all.
Hey, thanks. Hey, so Heather, you know how the PPP doesn't have a personal guarantee, but it still goes on their credit, right?
Well, the lending institution is going to pull credit, see where the credit's at, and the payment record would typically show up on that, but that's again through the lending institution, not through SBA.
Yeah. So, and traditionally, a business loan, it will affect your personal credit if you go bad on it, but it won't necessarily. Sometimes it doesn't even show up in your personal credit, like if you're trying to apply for a home, because it's actually on your business credit, which is, we're not going to go into because it's crazy how that works. Do I need to wait until the end of the 24-week period if I elect to file for PUA? I'm self-employed at PPP running out plus taxes due. You don't have to wait until the end of the 24-week. You can, anytime between 8 and 24, they just extended it for 24 for, I don't know, if there was a way to extend. Well, the employee amount increased. So before, the max amount that you can charge for forgivability for employees was $15,385. Now it's $46,154. So now it may make sense if you have extra PPP money and want to pay somebody, like it's essentially 3 times the $15,385.
Scott, I'm not sure that that's actually correct. Although the term has changed, I don't believe that the maximum loan amount has changed.
No, not the max loan amount, but the max per employee has changed. It's I checked it with so I checked it with Daryl, and I also checked it with the Treasury.
Okay.
And I didn't know that either, Heather. I found out Monday because a client told us on one of these calls. So yeah, they did increase it, which is weird. They increased it by 3, or they times it by 300%. It's nutty. If I receive the PPP on June 1st and my next pay period is June 5th, both the June 5th pay period covers payroll from May 20th through June 5th. Will the safe harbor allow me to use PPP to pay this payroll? You can't. But period, even though the actual pay period. All right. So Willie, I don't. I don't know the answer to your question, but I'm gonna type in an email that, jeez, keeps moving. All right, I'm gonna type this email in here. You can email them. Just copy and paste this question to this email, and they'll get an answer for you. It's very tricky with pay periods and stuff, how that works. Why did the SBA open the EIDL program again if they're already so deep in the weeds from the last 9 weeks of applications? I applied on April 1st, still haven't received my advance or my loan. Responding to concerns. So, well, because they they probably got told by the Treasury or the presidency to open it because these small businesses need the money. So, and maybe they let them hire more people. Who knows, Hillary? But that's what they did. You should be happy. But I don't know. You know what you can do is here. I'll put my information here. I can help you find. Okay, there you go. All right. I received $6,000 express portion of EIDL. If I decide not to take the actual EIDL loan, do I need to pay back? You do not need to pay it back. That is your money. It's 100% forgiven. You don't need to worry about it. Question for SBA. Remind me again the interest rate so for-profit is 3.75%. It is a 30-year, it's 30 years, not 30 months. And that's what it is. And then for nonprofits, it's 2.75%. Sole proprietor received PPP based on employee's wages, but didn't include her Schedule C. Can she pay herself from the PPP? Can she count as an employee towards forgiveness? Didn't include her cell phone. If so, write a check. All right. Well, Lori, this depends on their taxes. I need to see their taxes. It doesn't make sense that they would have done that without including this stuff on the Schedule C. So I don't know. Some of the stuff is very specific. So if you can just call us, we'll look at the taxes. We'll work with you. If your small business is a sole proprietor, will the SBA reach into your personal assets if you default on the loan? So SBA won't necessarily reach in there, but they are. So it's an EIDL loan, either EIDL or PPP or both SBA. I mean, EIDL's direct SBA monies. They're not going to necessarily come after you personally, but like Heather said, if you fail to pay it back and you want to file bankruptcy, it's a federal lien, so it's not going to go off your record until you pay it off. So do they come after you personally? Technically, I mean, it's not what it's really called, but they will put a personal lien on all your assets and your business assets. So the quick answer is yes. The documents state that the collateral is your business assets, but what about sole prop personal assets? So for the EIDL loan, you have to sign a personal guarantee. That means they can technically come in. So you got to figure out how to say this, but they can technically put a lien. They're putting a lien on your assets. So if you fail to pay back the loan, they can technically come and they wouldn't take your house, but they would kind of possibly put a lien on it technically. But it's a little tricky, Sharon. So let me have you call us. We can chat about it a lot more. All right, this is a good question, Heather. So is the SBA still charging points up front on new 7A and 504 loans? Are they still charging like the 3%, the 2%, or?
Yes, so the fees are still applied to those new loans, but again, through the CARES Act and Section 1112 of debt relief actually will have SBA absorb those fees or pay those fees on the borrower's behalf. So even though there are fees, they will be disclosed, it will automatically be paid through the CARES Act.
Oh, okay, cool. That's exciting. Okay. All right. If I choose 24-week period, do I have to keep FT during that period? You don't have to the whole time. I mean, you can do it as much as you want, whether you have the money or don't have the money, or whether you're open or you're not open, but it's up to you. It really depends on your business model and how you run your business. Our employee has quit. We'll be unable to replace him. His skill set, we pay him in 8 weeks. Okay, so you can call us and chat more about that, but yeah, you don't have to do it for the whole thing. I need help to
Heather, does the safe harbor rule apply there? So if the employees quit and they can't and they're trying to rehire, that won't necessarily hit their forgiveness, will it?
Exactly. So there are a couple of different safe harbors built into the PPP program. And basically what the applicant business needs to do is document everything. So if they have documented that they've required or asked their employees to come back to work and those employees have decided against that, then they just need to keep that documentation. With respect to that, 8-week or 24-week covered period, that's just allowing more flexibility to gauge that employee head count during that time frame as well. So good point, Alan. Thank you.
All right. So we're getting down. Well, there's more that comes. So we've answered 50. We have 7 left. For staffing services, employees work anywhere from 10 to 40 hours a week, depending on the assignment. If we reported 100 employees on PPP form, but now have a different 100 temps on assignment, how do we calculate the FTEs? Does SBA look at an average number of employees based on 40 hours a week? I think this is, I don't know if you know how to answer this, Heather, if I should just have them email us.
I know that the FTE count is 40 hours per week. That's what the agency is looking at. So anything kind of on a part-time basis, I think we'd have to take that kind of as a one-off and take a look at the specific scenario.
Yeah. All right. Okay. Hi, I received an EIDL loan for well over $25,000. Will the government report this to credit agencies? Well, it's really weird. So business loans sometimes are reported. If you fail to pay it back, they're going to ding you on your credit, so it'll be negatively reported. But if you're trying to do a home refi, it's not going to negatively affect your refi unless you don't pay back your loan. But everybody's in deferment mode right now, so it doesn't really matter. So no, it's not going to affect you. It shouldn't affect you. If you think it will, or you're trying to figure out how to talk about that and whatnot, you can call us. I plan to turn down the full amount of the EIDL. I just qualified for more. I'm not comfortable with the amount to be paid back nor the terms. How do you formally turn it down? So you can just tell them either you want less or don't take it, or do take it and then pay it back. Just put a lump sum and pay most of it back. That's what I'd recommend.
Scott, I think we said Noah recommended on Monday, if you're going to do that, if you're planning to take it and then pay a chunk of it back, have that conversation in advance so they can make sure that they re-amortize it for you. So you're not sitting there with a large payments, even though you've paid a chunk off. So have that conversation with them up front.
Yeah. All right. Good job, Alan. I'm glad you're actually paying attention.
I'm here to learn the whole time, and when you haven't got Sunita helping you out, I'm trying to step in and do what I can.
Thanks, sir.
But a great job, Alan.
Thanks.
Yep. All right. If we get the PPP funding next week, can we still wait to run payroll until September when our business has a chance of reopening? You can. Just your 8 or 24 weeks actually starts the day you get funded. So sounds like you're going to charge, Christine, you're going to charge, geez. You're going to choose the 24 weeks because, 8 weeks, yeah. So yeah, just choose 24 weeks, Christine, and then you'll be good to go. All right, look at that, boom. We've answered 56 and we have 4 left. We got the big ones. All right. PPP, a business owner operated as a sole prop from January to May 19, then formed the partnership from June 19 till January 2020, switched back to, oh my goodness, why'd you do that? Oh my gosh, switched back to sole prop in February of 20. That doesn't even make any sense. The lender says they calculate her payroll based on what she earned as a sole prop in 5 months, divided by 12. Practically, her payroll in the remaining 7 months, which operated as a partnership, is not being included. Looks so much underestimating solution. All right, Layla, just call us and we'll have to either get her more money elsewhere. That's what it sounds like we're gonna do. Get her more money elsewhere. That's a very specific question. So you should tell that person to figure out what they want to be in life. Do they want to be a sole prop or a partnership? That's crazy. Follow-up question to S Corporation. Yada yada, compensation limits. How do we calculate the maximum cash compensation allowed for an owner employee for an 8-week period? Is it 15? It is. If you choose 8-week period for any owner operator, it's $15,385. Baseline, so per owner employee. If there's 2 owners employees, it'd be $15,385 times 2. Does the maximum cash compensation include employer? It does include employer compensations and IRA and all that great stuff. I'm a service business and the idle asks for my COGS. I put in the amount when I should have left the field blank. 0, as I actually do not have COGS, do not have retail sales at all. What? That doesn't make sense. You have sales. I was mistaken, as in my internal accounting system, I used the COGS line to track expenses. Therefore, the loan I received was way less than I should have. I didn't realize this mistake. I really need to bear your loan. Well, from what Heather said earlier, if you already accepted it, you can't necessarily get a bigger loan right now. But I would recommend that you call us, Michelle Moquin, and we can help you get other loans. But I'd get, depending on where you are, you can possibly get one of the county loans. Are you sure? I'm sure you answered, but can a C Corp? Yeah. So regardless if you're a C Corp, an S Corp, a B Corp, a D Corp, and all the corps you want to make up, LLC, a sole prop, partnership, whatever you want to create. Everybody can get an EIDL and a PPP. Everyone. Unless you just do not qualify, like you're a 501c6 or you don't have a US ID. You can get all the loans you want, and you can get PUA and PUI and whatever you want. You just can't use you can't use the monies. Like if you have all 3, you just can't use them all for the same purpose in the same period. I applied for PPP and EIDL, which was declined. For 2019, I hired a CEO. The intention to increase revenue. The CEO did not work, has no income, under guidance. We parted ways. I ended up paying everyone $10.99 from the earnings of 2018. But I don't have enough to pay myself. Thus, in 2020, affected by the COVID, not able to help with the need. Have the events shifted a couple of the months of the 2018 tax week, so your company will qualify. Well, good stuff. All right, so let's see here. See what your name is. Tisvi Atchler, call us. Yours is very specific. We can help you. I need to determine which cover period is best. 8 weeks, but not sure to date. Date of funding was 4/22, payroll 4/24, pay period, so pay. The alternative cover period is confusing to me. It is to me too, Lisa. Our next pay period is, all right, very specific, Lisa. I'm not gonna be able to answer it on this call. Please call us and we'll help you. My single LLC made very little net in 2019, had lots of startup costs. PPP was calculated off of my 2019 net. How do I pay my employee, me? So how do you pay yourself? The PPP is my 1 week accepted customary rate. All right, cool. Jeanette Ozasa, just give us a call. We'll talk to you. Some of these are very specific. It's almost impossible to help you over the phone if I can't see your taxes. And I'm assuming you're not going to show everybody your taxes on this call, so we're not going to be able to answer it. All right, when you receive the EIDL approval email, is there a sliding bar or something that allows you to accept less than the amount you're approved for? Is it obvious? I don't think it's obvious. I think you have to tell them you want less.
Because I know Noah sort of mentioned something about this at a previous one. Heather, have you heard about anything like that? The sliding bar on within the portal?
I have not, unfortunately.
Okay.
I know that we have some third-party vendors on the PPP that are using their own portal for the application, and they have a sliding bar, but not on the EIDL. I'm not aware of that. If there's a question with respect to the EIDL loan amount, it's definitely best to contact the customer service number or send an email to that disaster customer service email box.
Okay.
All right, we have answered 66 questions. We have 31 minutes left. I think we crushed it. Oh, there's another one coming out of nowhere. On the EIDL, yes, there is a sliding bar. It's supposedly the maximum is shown, and you can go down from there. You cannot scroll up. Well, that's good to know. Thanks, Michelle.
I also got a similar comment in the chat from Brian.
Brian who?
Yeah.
I just had one of my staff come in and show me a copy of the screen, and there is a sliding bar. You can slide it down, but not up for the loan amount.
Excellent.
That is really awesome.
Yeah, maxed at 150 is what the current is showing on the screen, but they can slide it down and request less. So that's good to know.
All right. So Tsivy, I'm not sure how to say your name. It's TSVI, Atchler. It looks like you called some person, you didn't get a hold of them. Call us. We answer all the time. We're here. We're ready. We got nothing better to do. All right. We've answered 69 questions. You're crushing it.
And on the subject of other things that you might have better to do, we do have a webinar tomorrow, although obviously this is we're focusing on the CARES work. Northern California SBDC is hosting a webinar tomorrow on how to move your business online like a pro with an e-commerce expert, Shane Barker. I just put a link to the registration for that into the chat, which is a great way of thinking about how to possibly either expanding your business, giving yourself an extra channel, giving yourself some sort of lifeline possibly. And there will be other webinars coming on a number of topics over the next couple of weeks.
Hey,
we'll be sharing information on those as we go along.
Alan, you should do a poll since we have so much time and people are just chilling on here. They're not dropping off like flies. So why don't you do a poll like what people want to know more about?
Okay, I've got that poll which we did the same a while before. I can run that same poll again.
Let's see what we should change it. Maybe we should do like what these people want to know. Do they want to know like idle denial rebuttals?
Oh, that one. Yes, I've got that one. I can run that as well.
No.
The ones we had idle PPP.
Hey, real quick. Hey, we're talking to you. All right, I want to know if they want to know about Main Street, idle denial, which I think those two are on there. I want to know if they want to know about if they're ready to start PPP forgiveness. Like, are they already done with their PPP? Like, they're ready to fill out that application, that calculus application. And then, or do they want other monies? Like, I want those 4 questions: idle denial, Main Street, PPP forgiveness, or they want other monies, like they're expanding or starting or whatever.
Okay.
Since we're just chilling here, we got nothing better to do.
Okay, so I save that. And I can launch it. Okay. So everyone should see that poll in front of them. I'm not sure if I set it up so you could see it.
Yeah, I got it.
But everybody else gets to see it.
Yeah.
So we actually got something that could count as a question that came in through the chat. So Rhonda, I would suggest if you take that question and throw it into the Q&A, I'm sure Heather will have a response for you. So we're seeing a lot of people voting. So two-thirds of the people who've selected something are selecting that they'd like to see something on PPP forgiveness.
Look at that. There you go. Then we know more people. Most people are about in the 8 weeks or 10 weeks, like, because this is the 10th week right now that we're in.
Yeah.
First funding. So if that means, because what's very unfortunate is that the people that got the PPP, the first tranche, they didn't get the Flexibility Act until the 5th, which is 3 days before the end of the 8 weeks. So they probably try to spend it all in 8 weeks. So those people are like ready. And if you're ready,
I think for what we've seen and questions that have come through here, I think people are just concerned that if they're not following the rules correctly, they're going to end up with something that they thought was going to be forgiven that isn't, and they're going to end up with carrying that debt, which is something I'm sure they don't want to have to do. So I think that's probably why, from the questions we've seen and the comments we've seen, that's why people are so interested in PPP forgiveness. And that what makes it so hard for us, because we haven't really, we've not seen those the rules really well defined yet, and the banks aren't ready to accept those yet. So it's what you want the most, and it's actually the hardest thing for us to give you right now. Okay, I've got about 50% of the people who are eligible to vote have voted. So I'm going to leave it open for another few seconds.
Yeah, it's fine.
And then
So I'm just going to continue to answer these questions. If I can't, I guess I could read them. But regarding more information on PPP forgiveness, any idea when the banks will be ready? Look into that crystal ball of yours. Well, thanks, Allison. You should go to your lender and you should challenge them to answer this question, because guess what? I'm not them. You should knock on the door for, huh? Sorry.
I'm sorry, Scott, I was just going to say the best thing for the applicant businesses to do is to get on either SBA or Treasury's website, review the application for forgiveness, start to get your documentation together before you approach your lending institution. Hopefully by that time your lender will be aware of how the forgiveness will occur and the requirements surrounding it. But the information for the application is on Treasury and SBA's website as of right now.
All right, so E.M. Hedrick says, I'm trying to sign up for the Main Street workshop later today. Wants to know supervising institution. Just say SBDC. I don't know. I don't really know what it's asking, really. Just make one up. Say that, you're a business owner or whatever. Just make something up. Just put SBDC or put FDIC. I don't know, Hedrick. Just get in there. Just get in there and make it happen, Hedrick. Just choose something. They're not going to come after you. Don't worry about it. Can you put the vote screen on again? I accidentally closed it. Well, it's going to be it's still there.
I'm not sure I can easily.
What do you mean? It's still there, right? Oh, you let it go. Oh, okay, yeah. It's okay. Don't worry about it. They don't need a vote.
Put your selection in the comment in the chat, and I'll add it to the math. Although I can't see it making much difference on the basis we've seen some pretty clear strengths of votes on what people want to hear. I'm closing the poll. I will share the poll results so everyone can see what we have had. So that by a long 2/3 of the people who voted said they want to hear.
Oh, look at that! I got to take a picture of that.
So,
look at that. That's amazing.
Yeah.
All right, 45 out of how many people voted? Look at that.
Yeah.
That's how many people? How many? Yeah, look at that. Booyah. All right, she votes for that too. Okay, a small business owner replied, I was given an application number on 42 and not get anything. What can I do? All right, cool, whatever. Woo! All right, we are doing good things, answering lots of questions. Here we go. All right, we answered 88. Look at that, and we did a poll, and we did it all before 12. Not bad. So
that poll result.
So we're gonna all hang on maybe a couple more minutes, then we're just gonna put some more time back in your day so you can run your business or navigate these loans, or I don't know, just take the rest of the day off. That sounds good to me. Thanks, Alan, for the poll. Do you when you answer the poll, Alan, the way it works in these webinars, can you see who answered what?
I'm not entirely sure. I'll have to have a look and see on the results, but quite possibly.
We could reach out to them if you want. If you guys and gals don't want to call us, but we prefer you call us. We have people that are super easy to talk to. So must 100% of the EIDL be used for business? Yes. You can't go on vacation with your family with it. I don't really know what that means, but yes, 100% of EIDL has to be used for your business.
Now that use of the business might be paying your own salary, and once you've done that, what you do with it is a different thing. But it has to be a business use for an idle loan.
Business expense, not a personal expense. So you can't use it to pay out personal credit cards. You can't pay it off to like put money down on a house. We had that question come up too, which I thought was a funny question.
You know what? I think we see people are beginning to slide off. So I think it's probably worth our while.
We can go, yeah. So
of course, we say that. You've got two more.
Of course you say that, then you just jinx us. If we get the EIDL, how do we have to prove how we spend the money? Well, I don't know if Heather wants to say something, but I don't know how you prove that you spent the money on the EIDL the right way, but.
I'm sorry, you don't necessarily have to report back to SBA on how those funds were spent unless there's an audit or a question down the road. Again, it's all about record keeping.
Mm-hmm.
Yeah. Look at that. We almost answered 100 questions. Thanks, Heather. I think we're going to end it. We thank you very much for joining us today. We'll be here Friday. We can do it all over again. And we get to answer a bunch of other new questions. We're excited. And yeah, thank you very much, everyone.
Stopping the recording. Thank you very much.